CLNV had a very nice recovery today and some bullish price action, right? Let's go ahead and validate what could happen for the following sessions. What is up, you guys? Thank you so much for stopping by once again on this happy Friday. This is ARCa coming at you with a CLNV technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at CLNV on the daily chart here, and this is the broadening ascending wedge that we've actually kept some track of for quite some time now. Okay, so what I am looking at here in the price action is that we're printing an indecision doji. Okay, so this is a spinning top doji. Okay, I mean, usually I would like the body to be a little bit smaller so that I can be considered more like a spinning top doji like this one here. But still, nonetheless, it's kind of it's indecision because it's kind of like a tie between the bears and the bulls. Okay, so if that is the case, then there is the potential to come back and test our our SMA 10, which is our 10-day simple moving average, located at about about 660. And that's 6 cents. 0660 is what I'm saying. Okay. So now just to catch up the new viewers and the new subscribers, we've actually noticed that, well, first of all, this is a bearish setup here in a larger time scale because we are on the daily, right? So we have already accomplished test number 1 and 2 of the resistance, and usually test number 3 for a broadening ascending wedge would be that capitulation event. Okay, so the move that I'm more interested in here is actually the move all the way up to about that 33-cent zone. Okay, so now there's no guarantee that it's going there. In fact, I'm actually now considering making a statistical back test on this just to see the potentials of the upside and downside in a mathematical model or a mathematical perspective. Okay, so in this case, now I want to just to catch up the new viewers, right? So we're looking at here the potential of some time fractals. Okay, so now I don't really believe in fractal theory too much, or to a certain extent, better said, right? So from the beginning of from the genesis of this formation here, we can see that we made a 23-day iteration from the genesis to the wave number 1 top. Now, from the wave number 1 top to the wave number 2 top, let me line that up. It's a 26-day iteration, okay? And now from the top of the following iteration, which is actually starting right over here, to the top of the next iteration is another 23-day iteration, okay? So very, very interesting thing here. And now, if we're going to take into account this, the wave from these, if we're going to take into account this wave to this wave, it is 14 days, right? But I'm not sure that that's well, it could be, right, because we actually didn't go all the way to the top up here to make that iteration happen. So in all reality, this could be a little bit of an anomaly here. And then we can start the new count per the top side of this wave here. So then, if we were to imply that we can make a 26-day iteration from this point here, then we would essentially land at about January 31st. Okay, to maybe that upside of about 33 cents or 30 cents. Okay, so just know that this is not whatsoever certainty. In fact, this is very discretionary, and usually discretionary is more of a feeling than it is a mathematical back, right? So let's go ahead and move on to the next chart and see what we have. Okay, so so these are a few formations that we have been writing, actually. Okay, so very interesting thing here is that this could technically be considered a tri formation. Okay, so first of all, we did notice that we were printing what could be a larger scale pennant. Okay, so this is a larger scale pennant here, right? And then on this particular iteration here, we are building a rising wedge, right? Which could essentially be bearish. Okay, now within these 3 formations, upon the upside, this smaller formation that we're building here is yet another pennant. Okay, within the upside. Okay, so this is yet again bullish. So very interesting tri formation that we're actually looking at here. Okay, so if we were to imply that we are going to face that downside like we talked about in the first chart right over here, then you know, to the 660 level where that SMA 10 is, then let's see where the SMA 10, I'm sorry, let's see where that 660 lands right about here. Okay, so let's see, the next day iteration would be the iteration where we would go. Okay, so 660 would essentially be right here, and it's right at that support of the rising wedge. Okay, so please notice that this is the iteration for the daily, and we could come back and test this area. The values are right over here for you to see. Okay, focus in on that so you can see right at that support line. You can see that that's the 60 right at it. Okay, very interesting things here. Okay, so yeah, there could be the high likelihood that we come back down and test that that support level, and then continuing trading this thing here. Okay, so if we're going to make a rare breakout out of a you know, a bearish by nature formation, which is that rising wedge, it could potentially be in this manner here. Okay, so we can see, let me just go ahead and dim the other formation, which is the third formation of the three of them, right? So I'm just going to go ahead and dim it out just a little bit so we can focus more on the red one. Okay, so we're going to come back down and test this area here, and then upon this this support, we can actually make an upside, right? So that would be typical trading typical playbook trading rules here. We could come back and test that 869, and then upon the breakout of this bullish pennant, then we can actually come back and test our newly converted resistance from the smaller scale pennant into a support. Then upon testing that, we'll eventually touch down at the validation of support of not only the tiny scale pennant and also the support of the rising wedge. Okay, so this could potentially pose the possibility of making a breakout of a rare breakout of a rising wedge. Now let's take that price objective. Okay, so let's just go ahead and take a trend line from the top of the triangle all the way to the lowest point of where the triangle would be, which would be at that very last candle iteration here of about 4.55, 4 cents 55. Okay, so we take that trend line and we apply it to the supposed area of breakout. So let's just go ahead and say that we would break out on the following day, not the next one, the following day after that. Okay, so maybe Tuesday or something, right? So let's just see where that takes us. Okay, so that would take us to essentially 1432. Now let's just look back historically and see what 1432 has to offer. Okay, so upon this, it looks like we have some high relevance right here, or some confluence at about 14 cents. Okay, and this top side candle is actually from January 29th 2020, so it does have some relevance. Okay, and also let's just go ahead and see if any Fibonacci ratio has some relevance to that area too. Okay, so right here 1445 comes right at the golden mean, 2.618. Very interesting thing here. Okay, so very, very interesting that we could do that. I'm going to go ahead and draw for us a trend line right over here, suggesting that that could be the essential take profit for the shorter term time frame. Okay, so this is looking very good for CLNV. Nonetheless, upon making that upside here, which could be in I don't know, a few days, we can actually come back and then test not only the newly converted resistance into support, but also we would land right at the one spot 272 at 937, and then we would essentially succeed this and continue on to onwards and forwards, right? So this is looking very good for CLNV. So let's go ahead and now validate some downside and some upside that we're looking at. Okay, so this is going to be the RSI. Okay, so actually let's just look at one thing in the larger term RSI, and particular to divergences or divergences, right? So it looks like we've already started creating some new ones. Okay, so it would be upon this pivot right down here. Okay, so essentially let me see. So essentially these let's see. I'm looking at these drives. Okay, the blue ones. So it would be we have invalidated now these two. So what divergence is, or divergence, is the opposition of price action versus momentum. Okay, momentum represented by RSI in this case. All right, so we would actually just take these two out, and we would then connect these two right over here. Okay, so now we have two drives of regular bullish divergence. Okay, so actually that's hidden bullish divergence, and that usually happens when momentum is making a series of lower lows, and price action is making a series of higher highs. Okay, so we can see the higher highs right here. I'm sorry, higher lows. We can see them right over here. All right, so now these two other ones have been essentially invalidated. So now we just have these and this one potentially too. Okay, so yeah, we do have two drives that are currently in play. So we just make the connection to the pivot, okay, just like this. The pivot is right here, so we connect it to the price action. And that's how we can tell that we have two drives of hidden bullish divergence. Very good. And they're actually phantom drives of hidden bullish divergence. Why phantom? Well, they're going through price action in order to get from point A to point B. Okay, so that's very good. That's a very good sign. Okay, and it is sort of respecting it already, and we are in play. Another thing that I ask for you guys to do regularly, if you're a new viewer, then you'll know now. Okay, mind your RSI signal position. In this case, we are right in that gravitational zone of the bull weakness percentile, suggesting a gravitational pull right into the bull strength. Okay, very good stuff. Now let's go ahead and finish off the analysis with the last part, and this is going to be all of the RSI timeframes that are relevant to us right now. Okay, so we're going to start like we always do on the 30-minute immediate short term, and we can right away see that we have a limited downside from the RSI. Okay, so this is the RSI signal, the purple line, and this is the 14-day simple moving average. Okay, so we can actually see a downside, very limited here, and it would be just outside of the gravitational zone that can pull us back in. Very good stuff that we would actually see this succeed before that gravitational zone. Okay, so we'll use that 14-day moving average as a bounce before a continuation to the upside. The reason we can see that the upside is continuous is, first of all, because of its following time frame. Okay, so the time frame here, the bi-hourly, it has made a bullish cross above the 14-day moving average and suggesting a continuation to the upside. Okay, we're about 56% right now, so as soon as we get to that 58%, we'll be within that gravitational pull zone, and then we can continue to the upside, which is likely to happen relatively fast since it is a bi-hourly time frame. Okay, so now the 6-hour time frame is still suggesting some upside, and in this case we are very close to that gravitational zone here, so we can actually start getting a push or a pull right into the following one, being the bull strength. Okay, we would need a little more steam on the 6-hour in particular. Now let's go ahead and look at the daily, because the upper term timeframes are the curious ones here. Pardon me. So you can actually see that we've used the 14-day moving average as a form of support, and now not only are we getting that support from the 14-day, but we're essentially right within the gravitational zone now. Okay, so we can actually get pulled into the bull strength percentile and continue onwards and forwards. So this is good. Okay, now let's look at the bi-daily. Bi-daily is now in that gravitational zone too, suggesting a continuation to the upside. Okay, so this is okay too. And the 3-day has now moved outside of that gravitational pull zone that would essentially take us to the downside. Okay, it looks like it's getting ready to cross this 14-day simple moving average, which would essentially be very bullish. And we're also sitting in the grips of the bull strength percentile. Okay, so I think the 5-day has a little bit of a pullback, which is usually normal. Okay, so this is looking good. Essentially, a validated what we were talking about in the discretionary manner. We could look back at a test at about 660 before a continuation onto the upside. Okay, now as far as upside targets go, this is going to be a little difficult for us to see now, as we do need some more sentiment to kind of push this to the upside, but it is very bullish nonetheless. We could absolutely see within the next trading session to test not only the wick high of this iteration from January 17th and also the opening of this candle here, that would essentially take us to a range of between the 1.272 at just about, let's see, 0.783, so 0.783, almost 8 cents, to the 1.618 at $8.10. Okay, so yeah, we would essentially make a downwards move and then an upside continuation. Okay, this is what I'm looking looking at, please know I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets, okay? If you do feel like trading alongside me like this and charting your own drawings, then go ahead and refer to the link in the description below for TradingView, okay? So I am an accepted affiliate, and it would help me out greatly if you did open up an account with TradingView, okay? So this is very good stuff, you guys. Thank you so much for listening in. I wish you well, a very good night and a great weekend, and I will catch you at the bell on Monday. Adios.